Good morning and happy Friday to you all. My name is Fifi Peters, and today we are coming to you from Kempton Park, located in the OR Tambo Special Economic Zone, the OR Tambo International Airport Special Economic Zone, where we're here to continue a conversation that we have been having on the channel, and that is about the role that special economic zones can play in advancing the economic recovery of the country as well as the continent at large. The focus today specifically will be on the circular economy, just as being a corporate citizen and a good environmental, social, and governance citizen is now at the fore with the growing risks of climate change. In fact, the evidence of climate change already happening and the impact that it is having on the economy, a negative one at that. So we'll be focusing on the circular economy and how special economic zones can level up their green credentials, as it were, with a specific focus on the OR Tambo International Airport SEZ, what it can do and what it is doing to support a low-carbon environment while also driving sustainable growth and job creation. So that's why we're here, and we will be here for most of the morning. We look forward to hearing from you as our viewers on CNBC Africa, as well as the viewers and the physical audience here who have joined us in this room. But to kick off the session for us this morning, I would like to introduce the CEO of the Gauteng Industrial Development Zone, Ms. Thandiwe Ngobe, to share a few opening remarks.
Thank you, Fifi. Distinguished guests, potential investors, our partners, ladies and gentlemen, it is a pleasure for me to welcome you to this event, which seeks to look intently at what the OR Tambo International Airport SEZ is all about. I'm particularly excited to be standing before you in this Women's Month, welcoming you to an event which will be moderated by a woman, with a panel comprising of predominantly women, and talking to you about the very important topic of sustainable development, a concept that is key in the world we seek to live in and pass on to future generations. In putting together this event and the many others that we are hosting in collaboration with CNBC, we are keen to share information not only about the OR Tambo SEZ and the opportunities it presents, but also about this SEZ, how it can contribute to the realization of key issues such as sustainable growth and development. As you all know, our country is faced with multiple challenges. We believe, however, that in programs such as the SEZ, we can contribute meaningfully to the discourse and realization of opportunities that present a platform for reindustrialization, enhanced innovation, and broader economic expansion and growth in South Africa. As a subsidiary of the Gauteng Growth and Development Agency, which in turn is an implementing agency of the Gauteng Department of Economic Development, the work of the Gauteng IDZ is defined not just by its SEZ mandate, but by the broader contribution the OR Tambo SEZ can make towards the realization of a revitalized and sustainable economy for the Gauteng City region. It is therefore critical to us that we host events such as this one, so as to share information and network with yourselves, our partners, our potential investors, and the broader community on what this SEZ has to offer and how it contributes to the broader discourse of economic development in Gauteng, which development will and should result in both job creation and the development of small businesses. So without further ado, I welcome you to this event. And I am excited to be interacting with you. I hope you're going to enjoy the day. And with that, I'd like to draw your attention to the screens for a video clip that we have prepared just for you. Thank you very much.
Located in Gauteng, South Africa's most industrialized province and city region, the Gauteng IDZ Development Company is an SEZ company that was founded in 2009. A subsidiary of the Provincial Investment Promotion Agency, the GGDA, the Gauteng IDZ's mandate is to develop and operate the Special Economic Zone at OR Tambo International Airport. The airport is at the center of the Erythropolis, a 1,975 square kilometer development framework defined to enhance the industrial capabilities of Ekurhuleni.
The northern precinct of what we call ORTIA Precinct 1 is where we've built the largest food factory in the southern hemisphere. Globally competitive, globally exciting infrastructure that we've put up there. On the southern side is where we have the jewelry and diamond precinct, where again we have different buildings all put together in a cluster approach. We believe would be of interest to any investor that is keen to position themselves for export and wants to use South Africa as their base to target the African market.
The objective of the Gauteng IDZ is to facilitate the localization of manufacturing investment opportunities.
We also then have another phase that is located some 30 kilometers away from the airport, where we will be putting in fuel cells and the hydrogen economy.
Gauteng IDZ further seeks to support small enterprises in industries selected for location at the SEZ with locational opportunities.
Invest in the OR Tambo SEZ, the location is prime. And because of that location, you're a stone throw away from air cargo, you're a stone throw away from OR Tambo Airport, you're a stone throw away from Sandton, which is South Africa and Africa's financial district connected through a high-speed train.
So a prime location, the OR Tambo SEZ does offer a lot of investors looking to do business in the country as well as in the rest of the continent. But how do the ESG credentials of the SEZ stack up? And therefore, we begin our conversation right now in terms of aligning economic sustainability to the development of the OR Tambo SEZ. And let me introduce the panelists that I will be having this conversation with, starting with the lady on my very left, Thuli Zulu, the Divisional Executive of the Public Sector at Nedbank, so representing some of the financiers of the projects, some of the projects that will be coming into the SEZ. Seated next to her, Made Matika, the Chief Investment Facilitator of the Gauteng IDZ, our hosts, as it were, for this morning. And then next to her, Professor Fiona Tregana, the South African Research Chair in the Industrial Development and Economics Professor at the University of Johannesburg. And seated next to her, we have Marco Reyna, the Sales Director for Siemens Smart Infrastructure, and last but not least, Vinay Somera, the CEO of Isondo Precious Metals, one of the companies that are located within the SEZ as we speak. But to begin the conversation, I'd like to start off with a sort of broader picture of what ESG credentials are looking like on the continent at large. I was just citing some research from the United Nations Conference of Trade and Development, and according to them, approximately 15% or only 15% of economic zones in Africa have established policies and socio-economic and environmental objectives. So that's just speaking to the fact that not enough have established such policies, but also that there's a whole lot of room to improve. So Made, just start us off by helping us understand the position of the OR Tambo SEZ as it does come to your ESG credentials. What are they looking like right now?
Thank you so much, Fifi. So I'll start off there. You are right. I think that there's a lot to be done in Africa to accelerate, if you will, how we respond to the ESG targets that we have globally and for the African continent. Specific to the Gauteng IDZ and the OR Tambo SEZ in particular, one of the things that we are keen to do and are doing is to ensure that as we develop this SEZ and we evolve it, we do so from a point of view that ensures that we embrace and we incorporate sustainable development considerations and concepts within the development of the SEZ. So what that means for us is that when we develop, for instance, our infrastructure, we have a view of how do we then incorporate in the design of that infrastructure sustainable development considerations, be it from a point of view of power. I think it's safe to say that from an energy perspective, South Africa in general is having that conversation, so we're not different. But what that means is that from an sustainable development perspective, we certainly then need to also ensure that we have those conversations. We then also, from a sectorial perspective, because it is an SEZ and our job is to focus on promoting export-led growth and ensuring that we drive manufacturing, are keen and work on ensuring that we also promote an approach that really is enshrined in a circular economy approach. What that means is that for every sector that we select, we tend to have a view of, who are these investors that we want to bring into the SEZ. How can we create a value chain of support around those investors within the SEZ for location? And by so doing, ensure that we have a circular approach, we enhance partnerships, we reverse issues such as logistical costs, and we just create a platform through which industrial symbiosis in general can then be generated and then ensure that it comes through in the SEZ's development from an infrastructure, from an investment, from an operational perspective.
All right. Fiona, just if I could ask you to weigh in here, because, SEZs all over the world are required to level up right now in terms of their standing on the environment and the broader society. But if we keep it specific to South Africa, and if we keep it specific to even OR Tambo, as it were, so what do you see the potential of SEZs as, like OR Tambo rather, to advance growth and a much-needed economic recovery right now, but to do so in a sustainable way? What do you see that potential as, and what do you see that approach as being?
Yeah, that's picking up on a really important question, Fifi. And I think if we take a broader policy perspective on that, and we look at the experience of SEZs and industrial development zones, parks, districts, and so on, across Africa and more widely in developing countries, we can see a mixed picture. There have been incredible successes of industrial zones in advancing industrialization, growth, transformation of the economies, generating employment, and so on. And for instance, if we're looking at experiences around Africa, we can observe the industrial parks in Ethiopia, which have played a critical role in industrialization and growth and exports in that economy. I think one of the key lessons which we can pick up from these experiences across Africa and around the world is that for industrial development zones to play that role in kind of being more than just what's happening within them, in the sense of propelling forward a regional economy and a domestic economy, they need to go beyond just doing a bit more of what's already been done in the economy. They also need to go beyond just assembling. So, for instance, shipping in or flying in components, assembling them in the zone, exporting them again. Of course, that can generate some employment and some foreign exchange, but it's not really playing a transformative role in the economy and not really driving forward industrialization and growth. So it's really critical that the zones, for one thing, are integrated within a regional economy. In as much as they're separated and have a particular role to play, we also need to avoid them operating as enclaves. So there needs to be those productive linkages and spillovers with the rest of the surrounding economy, whether it be in terms of sourcing components, technological spillovers, skills transfers, and so on, which allow them to play that kind of driving and propelling role. And linked to that, to do something a bit more and a bit more advanced, a bit closer to the frontier than what has already been done in the rest of an economy, so that it's not just more of the same, but it's perhaps more technologically intensive, in some cases activities which are more risky, but have the potential to drive higher or to yield higher returns and closer to the international frontiers in terms of competitiveness, productivity, technological advancement, and so on. And then circling back to the green economy, I think the point remains not just doing more of the same, but being at the frontier in terms of clean production, energy efficiency, the green transition, and so on. So to play that really pioneering role that can then spill over and take forward as well what's being done in the rest of the regional economy and the South African economy more widely.
Yeah, I think you emphasized not doing more of the same around 3 times in your remarks. And I think, next round of questions, I'd like to just pick your brain and flesh that out a bit further about what you mean and how things can be done differently, right? Vinay, you're located in the SEZ right now, in the OR Tambo SEZ, and I know that your company is doing something really great, building or is behind the state-of-the-art manufacturing facility that's going to do some wonderful things in terms of beneficiation, something this country really, really needs. Talk to us a little bit more about what exactly you are doing, and in doing so, how you're also ensuring that you're ticking the ESG boxes.
Yeah, thank you, Fiona. So, Fifi, sorry. So from a sustainability, let's start there, from a sustainability perspective. I think what we are doing actually underpins the global sustainable industry development, especially in the hydrogen sector. We know that South Africa has some of the best wind and sun resources in parts of the country, but allied to that, we have most of the world's PGM resource, which is critical in sustaining the emerging green hydrogen industry. But that's of no value if we don't embed industrial processes within the country. And from a country perspective, that provides the biggest opportunity for South Africa to help reindustrialize on the back of this emerging economy. And Isondo has taken the lead in this respect. From 2013, we've been developing these business plans to actually embed manufacturing of components that go into fuel cells and electrolyzers called membrane electrode assemblies. And together with that, the platinum-based or PGM-based catalysts that coat the MEA. So those are the 2 products we will be producing at the OR Tambo Special Economic Zone, probably starting from next year, with the facility now well underway in terms of construction. And then overarching that as well, we also have a hydrogen deployment project where we can, from a source of hydrogen in Johannesburg, we can run 300 fuel cell buses and trucks from that. And why that's critical is that those 300 fuel cell buses and trucks will save about 30,000 tons of carbon dioxide per year. But at that scale, it provides the basis to actually assemble those vehicles locally, which is, I think, important from the GTI perspective. And the assembly of the vehicles can then incorporate our MEAs and catalysts that goes into that. So a full circular economy driven by hydrogen demand. And the reality is, as a country, if we don't have the manufacturing capacity embedded before the market hits, you're not in the game. You're going to be watching the sidelines. And I think from Isondo's perspective, us getting the capability to manufacture these MEAs and catalysts by next year, ahead of the anticipated growth in green hydrogen, we position the country well in that manufacturing space in that regard.
Could I ask how much that's costing you? Are you at liberty to share?
Well, it's costing a lot. Part of the problem in getting this high-tech facility up and running before the market is that funding becomes the issue. People tend to want to invest in you once you're already in production and you've got a business, but then it's too late. You don't need the money anymore. We've battled to raise the funding initially. We got the initial break from the DTI, and I must make this very, very clear. The DG at that stage, Lionel October, saw the value in what we are proposing, and the DTI gave us initial funding to kick off the feasibility for this project, and that then put into sequence a chain of events that's leading now to the manufacturing capability being started up. The funding we've raised initially is about 140 million for the first phase, We're back in the market trying to raise a further 120 million for the next phase, which is going to aid in our sustainability, which is the catalyst manufacture, but also the recycling. Recycling of these MEAs and catalysts. It's important to embed it upfront before you get into production to be able to then close that loop in terms of the circular sustainable economy.
All right.
So in total, I think with the building and everything else, if we get this done for around about 350 million, we would have been doing well, given that Johnson Matthey have just announced 80 million pound, a 1.6 billion rand investment in expanding their facilities for MEA and catalyst production for the green hydrogen industry.
All right.
So it's the right industry at the right time, and we're coming to the market as well at the right time.
All right. I mean, just the points that you highlight there in terms of, it said we don't really have a culture of funding startups in this country. There's a bit of trepidation when it does come to risk, and I don't know if that's going to change now that we have got this nascent industry that does need to get off the ground for all our sectors to become competitive globally and locally, and I'm talking about the renewable power. And so as the funder, as Nedbank, how has your attitude towards financing such transactions right now, particularly companies that may be coming to you and maybe thinking about setting up shop in special economic zones? How's your attitude towards funding companies like that right now, and has it changed? Has for the better?
Fifi, I think we've always prided ourselves as Nedbank as being a market leader in creating spaces for growing the green economy. So we are known as the Green Bank, and in the pillar, we look at ESG holistically from an environmental perspective, as well as the social impact and the governance issues. What we have found is that initially, when we talked about the environmental issues, your big impact projects of the IPPs were more readily and more transparent and easier to be to be able to fund them, and therefore it made it easy. To date, we have deployed an investment of over 28 billion rand. So we are not shy in the space. We certainly are a market leader in this space. We continue to bring innovation because the industry is moving, our competitors are moving, and the needs of our customers, to Vinay's point, are constantly changing. So we can't be static. One of the projects that we're particularly proud of is being able to bring a product that has a retail touch points. You and me have experienced the challenges that Eskom has had recently with sustainability of power.
Recently, it's been 10 years.
More recently, be kind to my client. More recently, we have experienced more stage 6, more stage 5, and as a responsive bank, we have put a retail product for our home loaners to augment and supplement what is available to the grid. We've got solutions for bringing it back home to this conversation. We have solutions that we're putting together for one of the provincial clients. I'm not at liberty to share which one, but our energy team is working with one of the provinces. They are bringing also a generation capacity into the province, and they've asked us to consider funding emerging players in that precinct to make sure that there's the fullness of sustainability, that all the emerging players are also taken into consideration. We are at the city of Ekurhuleni. I can say, because that's a public document, that they did indicate in their RFP that they needed that the responders would have to also consider smaller and emerging players that bring alternative energy into the grid. So we have, as a bank, been responsive and in certain instances very proactive in making sure that we understand the value chains, the impact, and making sure that from a financial sustainability and growth of this economy, we are as inclusive as possible.
All right. I think there's a number of emerging players that are seated in this room, and I think it would be interesting to hear from them what they think about what you just said, but more importantly, what you think they could do to strengthen their chances of getting a yes from you when they come to seek financing. But we'll get to that. Marco, last but not least, I mean, Siemens is on this journey, and it's pretty known all over the world. You are very intent on achieving your net zero targets by 2030. It's just around the corner. But in doing so, how are you walking the journey with your clients? And perhaps if we bring the conversation home, how do you see your role as Siemens in walking the journey with maybe some of the players that are already in the SEZ or that are considering coming into the SEZ?
Yes, thanks, Fifi. Yeah, from our side, as you said, we have the net zero at 2030. Yeah, the numbers were out. The last ones were 2020. We reached. Yeah, we were over target. We were at 54% now at the moment. Yeah. One of the examples as well here, Siemens Park, which is exactly on the same number, 54% reduction of carbon emissions, which we reached the last 3 years with our technology. And what we brought to our little business park on ourselves, this is what we try to bring as well into the industries and help, like the special economic zone as a whole, but as well the small companies within the special economic zone. With our portfolio and our knowledge in smart infrastructure and digital industries, we have the technology, and we bring the technology down to here to Africa to support there. From the e-mobility side, from the energy efficiency side, down to the efficient buildings, and where everybody knows us, the energy side itself, together with the process automation we have, where we can build a complete environment to help not only the small companies, but then as well the special economic zone. And as you said, we have 15% here in Africa of the business parks or special economic zones which are looking for energy efficiency, but all over the world. So we take our worldwide knowledge, put it together. We are in constant communication with our headquarters, with best practice in other countries, and bring the knowledge that we come to sustainability down to South Africa as well. So we have bursary programs. We train new technologists here which can run our idea directly here in the country. And one of the latest topics, what we are doing, what we call energy performance contracting, there we come then, for bigger zones, we come back to the banks as well, where we do audits and the consulting for either companies, any size, up to special economic zone, in all cases of optimizing their processes, their energy efficiency, go into what will come now, the green building certification, and put a whole package out of it and give then the business case and the full financial viability of the business case, and come then with a partner, us as Siemens, as a big company, partnering with a net bank, with other big banks, either locally or internationally, because we do it as well over the African continent, partner and help to get a business case and a payback and convince the bank or bring the bank on board and push the industrial development with that point, because funding is, I think, the pain point all over the continent, especially here, and to partner up and help then the industry, I think it's a quite important point.
Mm-hmm. But the experience that you're having, though, particularly with emerging players, how has the journey been for you and for them so far? So I'm trying to understand if you trying to help them on their path of becoming more greener corporate citizens. Are there any difficulties right now? I mean, we know that there's a lot happening in the world and there's different priority areas, even a lot happening in this economy. And I'm just wondering if you are experiencing any difficulties in that journey, or if it's relatively smooth right now.
I think the journeys are never smooth. There are hiccups in the journey, for sure. As I said, one is the funding. Unfortunately, it's one of the biggest hiccups. So to find the solutions for that, to have dedicated business cases and get the funding right, it's one of the hiccups. And the other one, like we said, sustainability, energy supply. So what we are pushing a lot is hybrid solution, green solutions there. They all work out quite well, but as well, some of the regulations are missing. E-mobility regulations are missing. To push these topics faster, as well for the economic zones, I think that's the 2 points we are working as well. We are pushing towards the next step.
Sure. Fiona, on regulation and policy, just given the fact that you work quite closely in the space, advising not only on a continental area, but also locally as part of the Presidential Advisory Office. And I'd like to know what you think about what's on the table right now in terms of some of this policy and regulation that can help advance a better circular economy around SEZs. What do you think about it? And I mean, how can current policy go further in your view?
Well, I think we can also link it back to what we were talking about earlier about what is the role of a SEZ or an IDZ, how is it different, and so on. And contrasting perhaps, the old models of what used to be called export processing zones, which are still used in some developing countries, which were based on sort of exemptions, lower wages, low skills, tax exemptions, and so on, and just producing sort of low value added clothing and so on. And this contrasts with the kind of vision, the forward-looking vision for IDZs and the practical experiences, that, as we've heard from colleagues on the panel here, of the kinds of technologies and frontier production which is being located here. So I think from a policy perspective, when one is designing the offering in an industrial zone, where is the emphasis? If the emphasis is on kind of exemptions and cuts and paying less, it's going to attract a particular type of firm and a particular production model, which is not going to be that forward-looking frontier type of production. So to attract these sort of enterprises, which I believe that the GIDZ is looking towards and that can really propel the economy forward, I think it's around value-added offerings rather than less. So it's about what are the benefits of clustering, of bringing firms together. Not all of them are going to work together inevitably. They're in different spaces and different industries, but hopefully there can be some collaboration and learning and linkages between them. The infrastructure, going beyond just the regular infrastructural supply and offering in the surrounding areas, to look at what are the particular needs that will enable those firms to produce in a more environmentally sustainable way. So partnering with the technologies which they bring and the infrastructure and the conditions. And really incentivizing that more forward-looking production in a way that is not just beneficial to the zone in isolation, but to the economy at large.
All right. Mede, I mean, in terms of what she's saying, so the zones are known for their incentives, lowering the cost of doing business, their support in accessing other markets, and ultimately with the goal of growing the economy and creating jobs. And I'm just wondering, to the point that Fiona was making about whether with these kind of special perks, whether SEZs like OR Tambo just are happy with any kind of investor that does come through, or whether there are asks and sustainability asks that OR Tambo itself has from the investor that does come through. So not just accepting any kind of money. And I'm wondering how you are thinking about that.
So we're very intentional about how we're positioning OR Tambo and the work that we're doing. So for instance, going back to the points Fiona made about the circular economy. It's always been the bedrock of what OR Tambo SEZ has defined itself as being, an SEZ that will cluster and will support through that the circular economy, so that we can ensure that we create a basis through which we can drive cooperation and not necessarily competition between our investors, and by so doing ensure that we create the sustainable jobs. We're also very intentional about ensuring that this SEZ responds not just to the vision within the borders of that SEZ, accepting that the SEZ really is a regional program at the end of the day, and that it must also then cooperate and support the vision of the city of Ekurhuleni and, broadly speaking, the province. So in engaging with the market and considering investors, this is always something that we do, because we've taken very much a cluster approach to how we develop this SEZ. It started quite accidentally, if one were to be honest. I think long before the whole story of sustainable development and the circular economy became a buzzword, because we conceptualized the jewelry precinct, which is linked to metals beneficiation. But at the time, it was very conceptual. You know, let's get the diamond cutters and polishers and the jewelers and so on. And of course, the likes of Finney now have come on board from a PGM perspective. But then we soon realized that to make it work and to make it successful is not just about the incentives. The incentives are absolutely important, but what's critical is the playing ground of these investors. Where do they go to get their inputs? Who do they speak to when they have to export? Who is driving those logistics? How do they support the SMEs so that they can subcontract some of those activities to the SMEs? What are the things that can be recycled? Do we need a refinery there, for instance? You know, all those different discussions. What do we need to do about skills development and enterprise development, so that the story is not just about the big players as well, but the smaller players? You know, how can they participate? And how do we then work with the partners such as perhaps a Nedbank or a Siemens in ensuring that it is all-inclusive, and that at the end of the day we are creating opportunities that are sustainable and are not just about profit. So that's been what the OR Tambo SEZ has been about. And I think that the timing is right now. We're now beginning to talk more broadly. Quite accidental many years ago, but certainly has become what the SEZ is about in terms of how we see the future, the different sectors that we're wanting to target now, the pharma cluster, similar approach that we're following, the green economy, similar approach that we're following as well.
And so for companies that come through, how are you thinking around measuring and monitoring these targets, that these companies that are your I don't know, your tenants, I don't know if that's the right word. As
they are tenants, they're investors, both.
That they're operating up to target, particularly when it does come to things like, you know, broadening the value chain for the emerging SMEs, skills development, and also lowering carbon emissions. Is there a structure in place presently, or something that the OR Tambo SEZ is working towards?
So there is a structure, but it's also something that we're working towards on the one hand. So we're very clear about, for instance, skills development. What are the programs that we need to put in place? We have an enterprise development unit that works on ensuring that we get in the game early. We don't wait for the investors. Once we've defined a cluster, for instance, we begin to delve into that cluster or sector, you know, and say, what do we need to do differently? Because if I'm to talk to an investor hypothetically coming out of South Africa, they'll ask me, do you have the skills? I need to be able to say yes, and convincingly so, because I'm doing something about it. So that's the approach that we take. But certainly there are other things that then become part of the discussion. So you're going to export X amount and you're going to produce X amount. In this process of the value chain, can we have discussions about how you could potentially support subcontracting? You can never insist, but it is part of the conversation. And I think early on, if you're honest about your intentions, it becomes an easier conversation with the investor or the tenant. The carbon credit ones is an evolving one. I think it's one that we're conscious about. And I think it's one that, as part of our first phase, because the first phase is located inside the airport park, early on, Airports Company South Africa indicated that as one of the things that they need to measure. So it's certainly one that we've taken on, but in terms of how do we get that to work, those are the things that we need to discuss, because in as much as the concept is there, the reality of the trade of carbon credits in South Africa is not quite there yet.
Right. And Vinay, I know you've got something to say about the experience of carbon credits right now and why that is not off the ground. And please do. But I also want to speak to you about beneficiation, because I have been hearing presidents of this country just talking about pushing the country to beneficiate more. We talk about the potential that this has to unlock a whole lot of value, grow the economy, create jobs, make South Africa great again, as it were. And yet, not a lot of beneficiation takes place in this country, and I don't know if it's just as a result of the lack of will, or if there are other real challenges to beneficiating more in this country that are holding that back. And I'd like to understand from you, your experience, where you sit in terms of that debate.
Yeah, thanks, Fifi. Just answering the carbon credit question first. Why it's important is, if I take the hydrogen deployment project that we have, the potential to save 30,000 tons of carbon dioxide per year that's emitted from diesel vehicles is phenomenal. But if you're able then to translate that into a revenue stream via carbon credit trading mechanism, that actually helps fund this project deployment. And this is a big project. It's in excess of R1 billion to execute. So you need every source of funding you can. And that's where carbon credits come in terms of the trading part, being able to help incentivize and also even fund these kind of developments. So it's important. Regarding your question on beneficiation, yeah, it's been an interesting journey from that perspective. The question is, why haven't we? Is it will? I think so. From our perspective, it's been a journey we've undertaken, and we've been able to execute successfully on it. There has been a bit of pessimism in terms of can South Africa do it. I think we've proven very, very clearly that we can, and we are doing it. The one question that always comes up is, do we have the skills? Yes, we have phenomenal skills. Our universities are producing top graduates, and we have direct experience in that. We have an intern recruitment and training program. Right now, we've taken over the last 2 years, the 6 interns, 5 of them are young ladies. And they've been trained by some of the top experts in the world in the hydrogen space that sits on our advisory board and our technical teams. So the knowledge transfer is happening direct transfer. And from there, we're starting to then translate them from interns into technicians, into technical skills. And we have some very, very lovely examples of that in terms of young PhD graduates that's coming into our intern program and now then getting permanent employment in the company as a technical graduate in this green hydrogen space. So we have the skills, we have the metal, and in terms of a value addition perspective, I think just to give you an example, we'll use platinum as a flow through, for example, in our catalyst development program, manufacturing program. So we don't price any margin on the platinum itself. The real margin happens in the catalyst manufacturing itself, where if you manufacture a kilogram of catalyst, you can probably sell it for 10 times your manufacturing cost on the world market. So that's where the real value addition from a beneficiation perspective comes in. That then translates into real revenue, substantial revenue growth for the country, and via that then into a substantial opportunity to train skilled graduates and create new jobs in the sector. It's a no-brainer. It has to be done.
Yeah. So I suppose the follow-up would be what SEZs like OR Tambo can do, if they can do anything, to change that. Because if we've got all the ingredients to make it happen, and if we know that, SEZs like OR Tambo will benefit from having a lot more clients that industrialize and clients that beneficiate, can they do anything to change that will right now?
OR Tambo, we chose OR Tambo specifically for its location. For our industry, The two ideal locations are next to a platinum refinery, but that SEZ is still a few years away, or next to an airport. OR Tambo is perfectly positioned because it has also a metals vault at the airport, so we can take metals across the runway into our plant, and then finished product from our plant across the runway onto a plane for exports internationally or even locally as well. We've had very good experiences with OR Tambo, with the team here, and of late, the speed at which their development is happening has been very, very pleasing. The incentives that's offered via the DTI into the zones is very important. But as Isondo, we haven't factored that into our initial calculations for sustainability, because we want to be sustainable without incentives. The incentives that gives you the additional edge to compete internationally, and that's very important from that perspective. But from this specific zone's perspective, I think being able to then be part of that whole hydrogen infrastructure, setting up a refueling station close to the zone and then serving the airport and the zone, from that perspective will be a definite value add that feeds directly into our local component manufacture as well. So there's a level of integration and interrelatedness between the tenants as Isondo and the zone as well. And the Gauteng government.
Sure. But what about maybe more enhanced access to finance? I don't know how Nedbank is thinking about beneficiation and the clients that come to you to say, hey, look, we're looking to do this, do a lot more value add in this country. We've got this location, this special economic zone that, can, as you say, you achieve your own sustainability targets, you use the incentives to make yourself more competitive, and it's a no-brainer, it's a win-win for us all. How is Nedbank approaching clients who want to beneficiate more right now? What are your concerns? Where are you seeing opportunity?
Vivi, I'll start with the environment. I think all of us want to see South Africa migrate into value-add products, because the end result is that our export value is high. And that does create manufacturing jobs within South Africa. What I certainly I'm very pleased with is that the DTIC is doing a lot of work with its entities, whether it is the specialized development zones or with its financing arms like the IDC. There's a lot of work that is being done in bringing us financiers, not just ourselves as Nedbank, but a lot of financiers, into the conversation early on where in the value chain we can bring in sustainabilities, new players. And in that cohort of work, the DTIC, through its partnership with the IDC, they've been very strict in making sure that there's labor representation, there's small business representation, and making sure that whatever work streams ultimately results in financeable transactions have a start of a common understanding of what is the goal. I think that piece of work kicked off during COVID, and I think it was time for us to reflect and say, how do we get out of this? How do we move forward? I'm very pleased with what Vinay is saying, is that it's a tangible place. It's starting to feel different, because for the longest time it felt like we are workshopping and talking, but with no tangible results. So our start point as a financiers in our own financial institution is really around understanding what is the end goal, because without understanding that, it's very tricky. You have new entrants, not necessarily with any track record, not necessarily with the financial muscle behind them, but really relying on what the future may look like. So you have to have a degree of certainty and what risks may emerge out of what the future may look like and what support you need to bring in. So we look at it in multiple ways. We have a special vehicle that we use called Mogale Trust for blending finance and making sure that it's affordable, because affordability is an issue. But its criteria does tend to ask for some of these questions that have posed to us in terms of, is this a sustainable project? What impact does it have? Will it have a return at the end of the day, because those funds have to be replenished?
Yeah.
So
but what about if it's not a startup per se. When I was looking at your background and I saw that you spent many years at Impala Platinum, and so has the people on your board. And you came out with that experience and you said, okay, we can do this. We've been doing this for all these years, and we can do this as a standalone. What about companies that are formed by individuals like that? I mean, are they looked at differently? Maybe some of the people in this room, actually.
Yes, it's a fair question, Fifi, because you do need to look at them very specifically. So we have a team that looks specifically at entities like Vinay's, where you have subject matter experts that broke away. It's housed in a section of the bank called Holding Entities Private Equity, where we look at them. It was former BE companies. That was the genesis of the business. They look at how professionals that are starting their own businesses and wanting to have different impact through being entrepreneurial, how do we support them? Because they have different needs. They have the expertise, but not necessarily the financial muscle. They've got the credibility, the experience, the technical know-how. So with a business like that, how do we support it? So we have different journeys for different clients.
Okay. So it's not a one-size
No,
fits
we
all
couldn't possibly,
approach.
because you are not going to respond to the right need at that point in time.
Okay. Marco, so still on the issue of beneficiation and ramping up industrialization in a sustainable way, just looking at some of the technology solutions perhaps that are on offer at Siemens at the areas of priority areas that Madej spoke about, agriculture, looking at, you said agriculture, you said
pharmaceutical,
the healthcare, and the like. So I'm not saying Siemens is expensive. I'm saying everything is expensive right now, right? Everything is expensive right now, except for data. Apparently, it's falling, but the price of everything is going up right now. And I'm just wondering how that is impacting on the approach in assisting big players, emerging players in their sustainability journey. What impact are you seeing there?
We see the impact. It's slowing down, but it's not only that everything becomes more expensive, but as well at the moment the delivery times are just a disaster. So for every technology, so everything at the moment shifts a bit out. So it's important to keep still the speed up and support them, even if in the background there are some hurdles. And from a technology point of view, when we see pharma, so we think, as Siemens, we think in verticals as well. So we support like a pharma vertical from the scratch, from the in-feed and the energy, which I think is important for all the industries. Yeah, they need energy, they need reliable energy, and we know, sorry to say, it's missing at the moment. So to support, like as well, the industrial zones to deliver that makes it already important for smaller companies to grow. And this you can deliver as well on short term, and I won't say expensive, but price competitive. Yeah.
Did you do low in your previous life?
And the biggest important thing is, and I'll throw the word of digitalization and monitoring in, because if we install it, to monitor it, to give it to the banks to show these were the savings, these are the savings you can do from a monetary point of view. And then what would be more important, and there we have to push the government here, is from the green point of view, environmental. There is not really, like we said, no carbon credits, no tax incentives. Yeah, Ramaphosa gave the first tax incentives now to household owners that it might come when they install PV and battery. But big tax incentives are still missing. The incentive to install something, to get greener and more sustainable on your own, these incentives at the moment, that push, is missing. And the monitoring of it to show what you really can save there, I think is important to bring us the step forward in any kind, but mainly for the small ones. Because the big international companies, and we see it from our own, we can use, if we go now carbon neutral, we use it in our international carbon neutral books to show that we are carbon neutral, so we have an incentive on it. Smaller companies in the industrial zones, they don't have a big incentive or even no incentive up to now because it's not incentivized here from the government. And I think that's as well an important step to go forward.
Yeah. I think maybe, Sistani, maybe that's something that, you know, in your private conversations with the important people, you can take as a takeaway. Just, you know, lastly, Fiona, as we get to wrapping this up, you did mention the importance of SEZs right now not working in silos, being a lot more connected, some of the spin-off and the benefits thereof. Perhaps just flesh that out a bit more in terms of what you are seeing practically. Is that happening? I mean, we're 2 years into this tool that was supposed to make us a lot more connected, being on the table, the African free trade, African continental free trade area deal being on the table. And I'm wondering what you're seeing by way of the level of collaboration or connectedness of SEZs. I mean, have they jumped on it, or is there still a little bit more work to be done, and what is that work that needs to be done?
I think it's a quite varied picture across the continent. In some cases, yes, quite connected, quite integrated with the domestic economy. In other cases, really working in silos or enclaves. So it's bringing in the parts, putting it together, shipping it off again. So I think when we look at these kinds of initiatives, they are an investment of public funds. Of course, the private investors are investing in their funds and so on. But from a public policy point of view, it is an investment, not only in the incentives, but in the infrastructure, in the physical infrastructure, the human infrastructure, the regulatory infrastructure, and so on. And there needs to be that return on investment, and that comes to how the offering is designed, how the benefits are maximized, and so on. So in terms of the integration, yes, we do see these value chains. Of course, production is happening in value chains, some domestic, some regional, some global. And firms are not necessarily going to overhaul the entire supply chains and so on, which are already in place. But I think part of the objective of policy interventions when it comes to the zones is maximizing those linkages, so that there's that pulling effect on the regional economy. And we're not only talking about supply chains. In some cases, building up those domestic supply chains might take time, because it's about building up sophisticated capabilities and so on. But it's also spillovers in terms of technology, in terms of skills, and so on. Really, so that we would like to see the impact of a zone such as this one, not only on the metrics of the zone itself, as important as those are, the metrics of the zone, employment and so on, but we would want to see that impact on Ekurhuleni, on Gauteng, and more widely as well.
In the region. I'm going to stop you there, because we have to say goodbye to our television audience at this moment in time, just looking at the entire circular framework and the impact that it can have on enhancing the competitiveness of special economic zones that can contribute towards the growth of the economy and job creation. We are still here in Kempton Park, but we're going to bid you farewell for now, and continuing the conversation on another day. But thanks so much for watching.